Let's jump right into today's explainer. We're taking a truly investigative approach to a very specific, kind of fascinating financial analysis request. Now, normally we're breaking down dense reports or pulling apart established data, right? But today, our source material is actually a highly specific, multi-layered prompt regarding Equitas Small Finance Bank. We're going to deconstruct the anatomy of this exact inquiry. Because by breaking down exactly what's being asked here, we uncover the actual framework analysts use to forecast future banking performance. It's like a masterclass in how to ask the right financial questions. Just look at the sheer ambition of this inquiry. It's wild. The source text asks, can you do a deep analysis to the Equitas Small Finance Bank Q4 2026 result and explain long-term goal to this bank? It's a demand to forecast and analyze a very specific, multi-layered financial horizon. Think about it. It's asking for an analysis of a future state, while simultaneously demanding an explanation of the bank's structural goals. It's a really fascinating snapshot of how investors and financial minds actually look ahead, trying to project current strategies all the way into future quarterly timelines. To make sense of all this, here's our roadmap. First, the core analytical request. Second, Q4 market expectations. Third, brokerage outlooks and graphics. And finally, long-term bank goals. Okay, Section 1, the core analytical request, breaking down the inquiry. So the absolutely crucial point here is that this isn't just one simple question. No way. It's actually 4 distinct analytical requirements rolled into a single prompt. When you look at the source text, you see a demand for a deep dive into the Q4 2026 results. But it doesn't stop there. It asks for the bank's long-term goals, a graphical presentation of what all the brokerages are predicting, and a baseline evaluation of the market expectations for that exact Q4 result. It's like a giant puzzle that perfectly illustrates the architecture of a comprehensive financial inquiry, touching on both the micro-level quarterly numbers and the macro-level strategic vision. Moving right along to Section 2, Q4 2026 Market Expectations Defining the Short-Term Forecast. Well, before we can even begin to analyze expectations for a future date like 2026, we absolutely have to understand what this term actually means. Market expectation is essentially the financial world's collective hypothesis. It's the aggregate of all those analyst models and investor sentiments rolled into a single projected number. The source text specifically wants a deep analysis of that future Q4 result, which means we have to look at the broader financial landscape and synthesize the consensus. It's not about one analyst's wild guess. It's about the weighted average of professional market predictions. Let's hit Section 3, Brokerage Outlooks and Graphics, Addressing the Visual Void. This quote from the source text completely hits the nail on the head regarding the inherent need for visual aids in finance. The prompt explicitly demands to see the data, quote, present by the graphically explanation. It inherently recognizes something we all know. Reading through dozens of different brokerage reports, each with their own target prices, buy-or-sell ratings, and revenue forecasts, can become incredibly noisy. To truly grasp the consensus, or to spot those crazy outliers, you literally have to map it visually. Since we're examining the framework of this request, let's look at the exact steps analysts take to translate all that raw brokerage data into the visual charts the source is asking for. First up, you compile the individual analyst and brokerage reports specifically targeting that Q4 timeline. Second, you extract the hard data, the price targets, the ratings, the revenue forecasts. And third, you plot these data points. Doing this creates a visual map showing exactly where the market consensus lies, and just as importantly, where there's divergence. It completely transforms a massive stack of text into a clear, immediate picture of market sentiment. Game changer, right? Finally, Section 4, Long-Term Bank Goals, Contrasting Quarters with Horizons. Now, there is a pretty stark dichotomy embedded perfectly in this source text. It's a real balancing act. We're weighing the immediate pressure of a Q4 result against the broader structural horizon of the institution. On one side, we have the immediate market expectations, the quarterly earnings, those short-term brokerage outlooks that drive daily stock prices. But on the flip side, the source explicitly asks us to explain the, quote, long-term goal of this bank, which really points to Equitas' long-term, multi-year expansion plans and foundational strategy. A company might miss a quarterly expectation but still be perfectly on track for its broader goals. The source text wisely forces us to look at the whole shebang simultaneously. Ultimately, evaluating this prompt teaches us a massive lesson about the nature of market research. True financial analysis isn't just about isolated numbers or hitting some specific target in Q4 of 2026. No, it's about how those short-term metrics actually serve the long-term vision.
The framework demanded by our source text, combining deep quarterly analysis, graphical brokerage outlooks, market expectations, and long-term goals, is literally the gold standard for understanding a financial entity like Equitas Small Finance Bank. I'm going to leave you with this thought to chew on. As time moves forward and we finally approach that specific Q4 2026 horizon, the landscape is definitely going to shift. How will those immediate, intense market pressures impact the foundation of the bank's grander vision? Will they align, or will they disrupt it? It's the ultimate puzzle that investors and analysts will be frantically trying to solve over the coming years. Thanks for joining me on this explainer, and definitely keep asking those tough, deep analytical questions.